We built a great new free tool for business owners thinking about selling their businesses. So I built this myself over a few months, so we're really excited for you to try. We call it our retirement calculator for business owners. So what this calculator does is it not only calculates a valuation for your business, it estimates what we think your tax rate might be on the sale, and we figure out what that's going to be represented in a investment portfolio. So based on your spending habits and how much you want to leave to your heirs, what type of legacy do you want to leave, and how comfortable are you with volatility in your investment portfolio. So let's use a real world example to show you how this works. So we went to the popular business listing site, BizBuySell.com, and we found this heavy truck repair business that currently has no asking price. So we're going to use this business as an example of how we might use the calculator to calculate a valuation and go through it. Now for this listing, they're advertising $1.5 million in annual revenue and about $390,000 in annual cash flow. Now this is a great shop. They've been around 64 years. They've got a book of over 100 customers, and about 90% are repeat customers. So now let's enter that information into the calculator. So we've got $1.5 million of revenue, and then we're just gonna enter the cash flow here, the $390,000. The calculator is actually set up to help you figure out what the cash flow is. Since we're using a business listing, they've already given us the total. Now your cash flow it's going to use your EBITDA. The calculator is set up to help you calculate the EBITDA. Your EBITDA is your earnings before interest, taxes, depreciation, and amortization. It's going to go through those calculations to figure out what your EBITDA is. Once we have your EBITDA, we're going to add your salary as the business owner and any perks that you receive as a business owner to figure out your seller's discretionary earnings, SDE, or cash flow. But in this instance, they just gave us the final number, $390,000. We're gonna put that in the calculator. Next, for the real estate, they don't mention any real estate, so we're gonna assume that they're renters. Sounds like they have a manager in place, so we're gonna say yes. And that increases the value of the business if you have a management team that's gonna stay. For this type of business, I don't think the sales are gonna be overly dependent on the seller, so we're gonna say no, sales are not dependent on the seller. This is not in the construction or food service industry, so we're gonna say no to that question. Typically, businesses in those industries have lower valuations. These type of shops, they typically don't spend a lot of money on equipment or CapEx. They do have a lot of equipment, but they typically are fairly long-lived. So the number's not too crazy there. So we're gonna say this business is not CapEx heavy. Got over 100 customers, so no customer concentration. We're gonna answer no to that question, but we're not selling subscriptions, so it's not subscription revenue or SaaS revenue. Next question is gonna ask about the value of the equipment. This is important for calculating taxes or if the business is only worth its liquidating value. In this instance, we're gonna say the equipment's only worth about $12,000. Then again, we're gonna ask about the accounts receivable and the inventory because this can be important if we have to liquidate the business and it's taxed at a different rate. So in this instance, we're gonna say $10,000 in accounts receivable and we're gonna say $20,000 of inventory. Then boom, the calculator is gonna kick out a valuation. So in this instance, we said $1,322,000. Now, of course, this is a rough estimate. We haven't seen full details on the business. So we think the range for this business is gonna be between about $991,000 and about $1.65 million. It's important to note these are for illustrative purposes only. If you use this calculator, you should not use it to make decisions to sell your business. You should reach out and consult a professional before deciding to sell. Now we got to calculate our taxes because what really matters is what we take home, not what the business sale price is. So going through the calculator, this business is in Connecticut. We're going to select Connecticut. We're going to assume that this seller is married. So we're going to choose married, filing jointly, and boom, we have our estimated taxes. So for federal, we're estimating $182,000, and for the Connecticut taxes, about $92,000. So that hurts. Again, illustrative purposes only. You should consult a tax professional about your specific business before making a decision. So our net sales proceeds are a little over $1 million. Now we got to turn this into a retirement plan. So let's say he's only moderately comfortable with the ups and downs of the market, which means we're going to give a mix of a stock bond portfolio. Really, every portfolio in here assumes some mix. I think this is going to show the profile of about a portfolio that's about 60% stocks and 40% bonds. And now let's say he does want to leave some legacy to his heirs, but not too much. Now we need to look at his other accounts. He has about $500,000 in other investment accounts and no business debt. He's 68, his wife is 65. We're gonna use the younger age because we're gonna need to be able to support the younger spouse throughout their lifetime. Then boom, we've got an estimated spending rate, little over $100,000 per year. Now it is important to note this doesn't include Social Security, so they're gonna have a little bit more to spend than that $100,000 if we bring in their Social Security payments. And we project the portfolio value to be around $1.1 million when his wife reaches age 90 and around $737,000 when she reaches age 100. So that's going to be a very nice legacy for them. Also leaves some margin for error. Of course, these are estimates on what the market could do. No one can predict the future, so the returns in the market could be lower than what are assumed here. But having that $700,000 left at age 100 does leave some cushion for the actual returns to be lower than what is in the calculator. And of course, that portfolio assumes that it is invested in that stock bond portfolio. If he were to just hold it in cash and not invest it, then he'd only have about $52,000 to spend each year. So about half the amount to spend. And at age 90, we'd expect to be at $860,000. And at age 100, $472,000. So again, about half that if they had invested it. So just for note, this assumes that cash yields about 2% and that stock bond portfolio is going to return about 6% total return per year. And these are just estimates for illustrative purposes. Again, want to consult a professional before making a decision, which means you should reach out to us and we can help and give you a much more detailed and fine-tuned analysis of your individual situation. But this calculator is going to get you on a really good start and give you a really good idea of where you are today. So you can access this through the link in our bio. Go give it a try. It's completely free. We'd love for you to use it.